basically with all the rage and just in the press right now with the GDXJ and the rebalancing and kind of that uproar that it's causing in the sector and with investors. I just want to ask you guys what you guys think about that kind of window of opportunity, if you will, to kind of get into the space now when there is kind of intense selling pressure, and you are able to get into a lot of these companies, at a much cheaper valuation and price than you were, let's say, 3, 4, 5, 6 months ago.
Yeah, well, if that person at my aunt's place had asked me about the mining industry, then I'd be much more excited to recommend them to buy now instead of just Bitcoin going to the moon and forever. So yes, I am also like Nick looking at what I guess could call nano cap companies that aren't even 20 million, sometimes not even 10 million market cap. And like you said, Jay, they are really not moving. They are, consolidating. Some of them just have a great chart where you can see that insiders are holding on to a lot of shares, and you can see them continue to buy at these levels. And sometimes you even see, news of progress in these companies, but the price doesn't budge, or if it does, it's up maybe 2 to 4%, but nothing crazy. If you go back to July and August of last year, just the whisper, just the gossip around any results coming out or just drilling sometimes was enough to lift the price of a stock maybe too much. And I see something completely different now, and so I am looking more at smaller explorers, which is not even my area. I just like to buy something that is undervalued and then spread out my risk. I like the optionality plays. I like the companies that do nothing but just buy projects. But now I'm looking at these and I'm salivating, I have to say, because they're so tiny, and at the same time, that they can go up so much so fast, because you just look at the chart and you can see the price action and how sometimes there's not even any news related to the price movement, and you think, so this was probably just a change of sentiment. How much more what will happen when there is a change of sentiment in the market and they actually hit something, if they hit something. Now that's the big question. The timing of everything is completely out of our control. So if we have a really slow period this summer, which seems to be the case, and then they come out with bad results, what's going to be the catalyst for the stock to pick up later on in the fall and beyond. But things look cheap-ish again, and that really excites me. And so I'm trying to control myself to not just go out and buy everything, because I do think that there's still a general market crash coming, and I want to have some cash to make the most of that opportunity. But at the same time, there are, like Nick has said before, in the very, very tiny junior stocks, sometimes they don't move to the downside because they're so illiquid and there's nobody buying or selling them. The sellers are insiders, and so they're not really interested in selling, just because the general stock market is selling off as well. So yeah, I'm looking at tiny companies, but I am starting to look at the stuff that I previously owned that I want to buy more of as well, and that's where the temptation lies. I just want to sort of spread out a little bit of money in each stock, but nano caps are really interesting right now.
Well, I love hearing that from Fabi, because that's definitely where I focus most of my attention, and I also like the fact that many of these nano caps are not at all affected by this GDXJ rebalancing and all this stuff. Mm-hmm. But to comment on that a little bit, I find it interesting that a lot of the experts in the industry, I just listened to a podcast. I think it was a Mining Journal podcast with Rick Rule and Joe Mazumdar, and the whole podcast was about the GDXJ rebalancing. And then I saw some emails. I'm on like the free email list for Marion Katusa, and he's talking about this big opportunity coming. It seems like a lot of the experts are all kind of lining up. And so, it is interesting because it could be one of these arbitrage opportunities that everyone sees coming, and you just need to time it right. So sometime between now and mid-June, when the rebalancing or whatever is complete, there is this interesting opportunity. It's definitely not my main focus, but I do have a little bit of cash on the sidelines, where I would not hesitate to sell some smaller explorer I own that hopefully would move up a little bit between now and then, and maybe buy one of these developers or mid tiers that is affected by that rebalancing. But I have to say it's not my main focus, but I'm definitely keeping my eye on it, and I find it just very interesting that so many of the experts seem to be talking about the same thing right now.
Well, I think it's in their best interest to talk about it because they have so much money to throw around. I mean, we know who these people are. They can't just pick a nano cap and go all in. I mean, they'll quadruple the price in like on the same day. And so for them, what they're doing with their money is they're trying to look for those mid-sized companies where they can still get a good return in a relatively short period of time. But for people like us, because we, at least not intentionally, we can't really move the stock so much compared to them. We can still buy quite a bit of those nano cap stocks, and on a percentage basis, do way better than these big guys are intending to do. Because I mean, let's face it, you're looking at a mid-tier company or at a gold producer or something like that. It's not just gonna all of a sudden double or triple just because sentiment has changed, right? It needs to have a fundamental reason. And so I think they're talking their own book, which we all are to an extent, but it's what they can do. It's what they're able to do with their money. And I don't think that applies to everybody.
Yeah, if these wealthy individuals were trying to buy up these microcap juniors, I mean, they would run into the same GDXJ problem where they would encroach on the 20% threshold themselves. So it makes sense for them to look for more liquid stocks. And you know what? I'll actually take the other side of the coin here. With the GDXJ massacre, if you will, I've actually been loading up a bit more on these mid-tier producers and kind of development stage companies than I guess I would normally allocate capital to. But I guess it always depends where you are in the cycle. And when you see a lot of high quality mid tiers with real production and growth profiles, and the share price is getting slashed by 30, 40, 50%, it comes there comes a point in time where you look at the fundamentals, and yes, the gold price isn't like $1,300-$1,400, and that would make life better for basically every company in the space. But just to use an example, a company like Semifo is one that I'm watching right now because just a year ago it was kind of more of a market darling. It was trading at over, I forget, like closer to 2 billion market cap, and this company's flush with cash. They have one project in production, but they're putting another one in production by I think like middle of 2018 or something. So they should be around a 400,000 ounce per year producer. And again, they have a lot of cash. So, it comes to a point where this stock gets hammered so much where the enterprise value is, just dropping so much, it starts to look really appealing. Just because that even if this correction persists for a long period of time, if you're an investor and you get into a company like that, at least they do have a lot of cash on the balance sheet, minimum amount of debt, so they will be able to kind of weather the storm. And with I guess with mid tiers and producers in general, you worry a little bit less about dilution. There's less fear of that. There's no guarantees there won't be any, but that's generally the case. So with these drastic pullbacks, I just kind of think like if a stock is down 50%, it needs to rise 100% just to get back to break even. So we're not talking about 10 baggers here or anything like that. But, if you have some capital that you want to allocate to, maybe I guess less speculative plays in a sense, since producers are kind of more proven. It's a pretty attractive proposition to me to be able to get into stories where I just think realistically, conceivably, I can see a return back to, if not 100%, then, at least a 50% rise or something like that is not, outside the realm of possibility. And you don't really need a drastically higher metal price to kind of see that materialize. I think a lot of it is just you just need a slight shift in sentiment, and you just need this whole GDXJ rebalancing thing to be kind of over with. And I think these stocks will recover quite a bit.
Yeah, it'll be interesting if that materializes. I mean, and for a lot of people, that is the type of risk reward they're looking for. And I guess I'm just too greedy, because when you say, potential of 100%, but you're okay with 50%, I'm thinking like, oh, minimum of 100%. Why not? Five back. And I'll just add from a risk reward. This is something that I'm trying to figure out more. Again, like beating the drum on the ASX. I believe there is tax loss selling going on right now. You could think about right now we're in May, and it's similar to November for the TSX, because Australia is kind of on that 6-month difference in terms of summer and winter and all of that, and from taxes as well. And I don't think it's necessarily as extreme as it is in Canada, but I'm not 100% sure about that. If anything, I think last year was more of an anomaly, because as Jay said, there was tons of activity on hot copper, at this time, and it was kind of building up. But right now, the ASX feels like what the TSXV felt like to me in November. So that's a consideration. And I just wanted to give, a shout out for people to check out hot copper. If there's one really, really important thing compared to a site like CEO.ca, it's that you have years and years of information all saved on hot copper. And I find that fascinating. And it can get pretty nerdy, but still, this is incredibly valuable, where you can go back 5 or 10 years and actually follow what people were posting on some of the biggest wins. And you look back in the last 10 years, and the bigger wins did happen on the ASX compared to the TSXV, at least from what I've gathered. I found multiple 100 baggers. And I mean, you go back 15 years and you find some that are like 1,000 baggers. So again, it's like hot copper, you can do the research. You know that this exchange has history of having these serious multi-baggers. And we're in this tax loss selling type period, which I'm really excited about, but you don't really hear anyone talking about it, at least in North America, because they don't think about, taxes for people in some other part of the world. They only think about their own taxes in, Canada, the US, or whoever our listeners are. So it's just, there's a lot of, factors that are actually quite interesting, for the ASX right now as well. And it just goes to show there's a lot of opportunities out there, whether you're looking at the larger type plays that are GDXJ related or these nano caps on other exchanges.
Yeah. I'm not sure there is an opportunity cost in trying to capitalize on what I would consider to be a momentum play, with the GDXJ rebalancing and all of that stuff. The thing is, I know for a fact I'm not a momentum investor or a trader. And so I will probably buy at the wrong time and sell at the wrong time. I am very just very convinced, at least for the moment, that my only skill in investing is buying when it's low. And so, like Jay, I would prefer to buy the stuff that's getting sold off now, because let's face it, fundamentally there is no change to their business. And also look at the nano caps, but trying to look at a 45-day period or something like that, I just know for a fact I will mess that up, and so I don't try to do that as much as I can avoid it.